Here to share where he is finding opportunity, Chris Verrone. He's the head of technical and macro research at Strategas Research Partners. Good to see you again.
Great to be here.
So where is the opportunity now after we've had a pretty darn good run?
You know, I think what's tricky is we're back at, call it 44.15, big level.
Yeah.
You still only have 40% of the S&P above the 200. So to say this is like some great rising tide would not be true.
No,
so we got to pick our spots.
Anything but. I'm looking squarely at the Russell like, when are you going to do something?
And we know where the leadership has been with the Mag 7. That certainly has continued. But there has to be other things to do or other places to play. And I think there's a couple areas that get neglected that actually act quite well.
Talk to me.
Industrials in particular. I mean, these things have largely been leadership for a year, have not gotten anywhere near the attention that tech has gotten here. Look at names like Parker Hannifin, new absolute and new relative high today. PACCAR, PCAR. There's like 20 analysts that cover this stock. There's only 4 buys on it. So strength is being neglected. We love that combination when you have a good chart with the sell side is totally not paying attention. Even within tech, Scott, look at IBM. IBM is about to break out of a huge base here. Above 150 is a major breakout. 22 analysts cover it, only 5 buys. So
you're speaking Stephanie Link's language. I mean, first of all, she owns IBM, and she bought Parker Hannifin recently. I mean, a real bottoms-up value investor, but you have to go really down to look bottoms up.
And you have some valuation support with those names. I think they're largely neglected. They've been relative leaders for the better part of the last year. You know, also kind of in this group, you could put the home builders here still. The way they responded from being very oversold a few weeks ago right back to the highs, I think is how leaders behave. And, you know, there's always this risk. Are you owning home builders into a slowdown? Believe it or not, home builders are not very cyclical. I know that sounds crazy. When you look at
they're super duper rate sensitive, aren't they?
You know, it's funny, not how you would think historically. That relationship has been much more pronounced in the last year or so, but not really when you look at the life of the data set. They tend to be far more secular. They go on these big secular 10-year runs. I think we're in a secular home building run, and every time they sell them down to you 20 or 30%, like we had a few weeks ago, take advantage of it. They're good long-term setups.
Just because we don't have enough supply?
I suspect that's the secular story here. Remember, we think of 08 as them leading down before, during, and after, but they acted very differently in the slowdown in 2000, 2001, 2002. They led the entire time.
We've gotten over some key technical hurdles overall in the market. What does it mean? Where does it take us?
You know, it's a good question. As we think about 24, the things I'm really queuing off of are the following. Number one, do we get a broad expansion in new highs? I mean, even last week, you had a very good rally. Only 10% of the S&P made a one-month high. I want to see something 50, 55, 60%, generally more rising tide, escape velocity, all things go. The second thing I would just note, look at the leadership characteristics of this move. If the market's going to go on to decisive new highs into 24, I think it would mean it's because the economy is still okay. If that's the case, don't we need discretionary carrying the flag here of leadership? Small caps, beta, all the things that you generally look to really signal risk on. They haven't made up their mind here yet. So, you know, 40% above the 200-day, I still think you proceed selectively, and not necessarily skeptically, but just be mindful that if you're going to play here, make sure you're owning the 40% that are working. Well, the other 60% you can't play.
You can say skeptically because, I mean, you kind of have to be skeptical that, you know, the economy is going to really hang in there. And that's why it's so difficult for people to buy those stocks right now. They think, you know, you want to make a call? Well, I think they've troughed. Well, not if we're going into a recession, they haven't.
You know, it's funny, like even some of the vaunted groups that you would consider very pro-risk or pro-cyclical, like semis, only about half the semis are actually working. The other half are just nowhere on the field right now. Look at strong semis, KLA, 10-core, AMAT. But then you look at Qualcomm really hasn't done anything. Texas Instruments is still a disaster here. So it's very split, even in the market's most vaunted groups. What I would watch globally, I think we'll get some signals here globally. Watch Kospi. They've tried to rally this thing over the last week or so. Obviously, very pro-cyclical index. I think that would be an important part of any really constructive 2024. Watch Brazil. This actually acts really well. It's probably the only market I could find anywhere where the stocks are good, the currency is strong, and the bonds are bid. We call it the hat trick. Find me another place in the world where that's the case.
Give me your view of the Magnificent Seven. As a group, they get knocked down, and then they come back with a vengeance.
So we call it the Magnificent Three. I think 3 of the 7 are legitimately magnificent type charts. I think the Microsoft chart is fantastic here.
Been at a new all-time high.
You can't fight that. Apple generally has still led. And then take your pick between, say, Meta or Amazon. But Google's still below the 50-day moving average here. Tesla is one of the weaker of those. So I think this name, Magnificent Seven.
You didn't name NVIDIA. NVIDIA was like 400. Now it's almost 500.
Put it in that camp of excellent charts. But to say it's 7, I think is a bit of a stretch here. I think the big question for this group of names, if you look at their spread versus equal weight S&P, if they're reflective of large cap tech.
It's the wider than the Grand Canyon.
Widest we've seen since 99. Now that can persist and persist and persist as we saw in 99, but I think the bar is high for these to keep doing what they've done.
All right, good stuff. Appreciate it. Chris Verrone, thank you.